Welcome to Invest. We talk about investing, finance, and professional development. That's the recording time of 8:57 a.m. on the Eastern Time on Monday, November 13th. Hope you guys had a good weekend. And I'm trying really to get back into the things. Thank you so much for the support. Despite, it's been almost 90 days since I last posted my last video, but appreciate you guys for welcoming me, back into the ecosystem. And thank you so much for all the kind words and the good praise on, the fund that I've been developing. Yes, again, I'm working as a venture investor, so if you guys are in need of funding, feel free to reach out to me on my Patreon, for my guidance, and I'm happy to, block out time to do coaching sessions to help you establish your business plan and then subsequently potentially, invest, but also introduce you to investors, which is the bulk of what I do. But let's take a look at the market real quick, shall we? As you can see, as of this morning, we are sitting flat at the 2050 level, which is a technical level specifically. It's very precise this morning, huh? Isn't it? 2050 is a level that we identify, and as that translates from a level down from the 2150 level, which we did not get to. So as you get to approximate level of 2150, you are below it and you linger. Eventually you have to come down to a next level of support, which is again 2050 level. And is this a sustainable level, right? You could see that with respect to the current level on the RSI is 70 out of 70. So we are fully extended. And then respect to the weekly front, we are also quite extended at 65 out of 70. On a monthly, similar flat perspective, indicating that the bull market should be happening, contingent on us, obviously, replenishing the momentum on the weekly and daily front, which, as you can see, we're quite extended. So what it needs to do is that we need to cool down, and form a higher lows, which is staircase upward for us to get there, right? So you are seeing a cup and handle right now. You can see a cup, right? So you need to kind of come to a secondary level, 1850 level. But relatively speaking, which is the strongest level, 1850 or is it 1650? I would say 1650 is definitely a stronger level, relatively speaking, right? So seeing that coming back down, and the point of it is not to just come back down for the sake of coming back down, it's just to reaffirm the consolidated level, right? So with respect to Bitcoin, you could see that on the spectrum so far, daily is fairly extended, even more extended than Ethereum at 75 out of 70. Weekly also at 73 out of 70, quite extended, right? And you are seeing a similar momentum in terms of like how Bitcoin and Ethereum are trading. It's just that Ethereum is slightly delayed compared to Bitcoin, and also Bitcoin is a lot more extended as well, right? So what you need to do again is to cool back down halfway again, right? At ideally 31,500 to even more of a consolidated level, frankly, at the 27,500 level. You could see that because of how extended we are, it's healthy for us to come back down slightly, right? And on the monthly, you could see that we are also a little extended at the 60 out of 70. So coming back down, cool back down a little bit will be important for us to keep going, because you cannot just go sky high, up and away, right? And then on the SPY front, take a look at on a high level. We are at the 60 out of 70 on a monthly, which is a little extended. Weekly is also looking quite bullish actually at 55 out of 70, and then on the daily, obviously very extended, super sky high, and you can see that we clearly have broken above the level of resistance that we were having, 436, right? We are opening on a market on a kind of slightly lower notes at down 0.3% so far, and we can take a look at why, right? Sorry, I think my ad blocker is like telling me to. Okay, maybe can we move this? Anyways, you could kind of see, apologies for the blocker. It seems like with respect to the CPI spending report, it fell in October. So when that's being said, it's again is a historical depiction. It translates into a negative market sentiment. And with that being said, it translates to a negative day today. And also Treasury yield is slightly spiking a little bit, up 4.672%. So across the spectrum is today, Mondays are typically green days, but today is a slightly red days because of the again consumer spending report that came out depicting last month, tracking the credit card transactions. And so let's take a look at anything else that we should kind of talk about. Seems like, yeah, again reframing the stock market. I do believe that it's very likely that with the momentum that we're in, despite today the consumer spending report was slightly lower, that we should ideally translate in more of a upward swing because of the window dressing effect that many fund managers will be progressing with. So again, it's an artificial effect, but also on the technical front, it also translates well as well, right? So again, just to recap, equity market, we should ideally see more elevation because that's just how it's supposed to be historically, but also fund managers activity. Bitcoin, Ethereum quite extended again, so definitely be cautious about dollar cost averaging around this level. And with respect to like next year, I guess in the foreseeable future perspective in Q1, Q2, I do believe that the stock market will see a little bit choppiness, and with respect to the crypto market as well. I think as we see the decline back to a more of a substantive level at respectively for Ethereum, let's just talk about that specifically at 1650 to 1850 spectrum, it will replenish us to get ready for more of a substantive support level to progress onto the bull market initialization going forward, sometimes in Q3, Q4 for 2024 next year. Okay, so appreciate you for joining me this morning again. Thank you for the great support that you always give me. Have a great Monday, and I look forward to seeing you guys soon. Bye bye.